guys, welcome back to the channel. Today I want to break down DoorDash, the latest earnings, why the stock dropped, and what the valuation really looks like for the company, and possibly the opportunity going forward. The stock is down about 32% from its all-time high, which occurred in 2025. Everything in this video is coming directly from the investor relations page, their earnings release, shareholder letter, and presentation. Let's dive right in. All right, first of all, let's talk about why the stock did drop. DoorDash actually posted really strong results for quarter 3 2025, but the stock pulled back quite a bit because of margin pressure and increased investment spending, which a lot of companies are increasing their spend and investment amount, and it's making a lot of investors cautious. So maybe has some sort of macro environment effect on other companies as well, like DoorDash. Management told investors that they're internationally pouring money into international expansion, grocery and retail, DashPass growth, and integrating Deliveroo. These investments raise near-term operating expense growth, which creates margin pressure, compression of the margin, basically growth, even as revenue keeps climbing. So the dip wasn't from a revenue issue, it was a market overall concern over profitability timing. Some of the key earnings results pulled from quarter 3 2025, total orders 776 million, up 21% year over year. Marketplace GOV, gross order value, 25 billion, up 25% year over year. Revenue 3.4 billion, up 27%, and adjusted EBITDA came in at 754 million. These are strong growth numbers for a company like DoorDash, especially when we have consumers pulling back on spending. We see restaurant stocks going down quite a bit, not meeting their earnings. So that's why I think this is really impressive in a tough macro environment that we're experiencing. These are really strong growth numbers, and GOV growth actually accelerated after adjusting for the leap year comparison. DoorDash has said that U.S. restaurant growth remains very strong. In fact, U.S. restaurant GOV hit its fastest year-over-year growth in more than 3 years. However, international total orders decelerated slightly, and that's something I would want to look into a little bit more before I buy a stock like DoorDash. Slightly due to lower order frequency. This wasn't a demand collapse, it was a frequency effect in specific markets. So overall growth remained solid, but the mix shifted just a bit. That's what analysts are focused on for a company like DoorDash. Now let's talk about the balance sheet. The balance sheet is very strong for DoorDash. That's something I like to see for a company that I want to invest in. One of the strongest parts in quarter 3 2025, DoorDash generated 871 million in operating cash flow and 723 million in free cash flow. They also completed the Deliveroo acquisition, adding cash and short-term investments to the balance sheet. DoorDash continues to operate very low long-term debt, giving the company flexibility to keep investing heavily without stressing the balance sheet. There's also another concern with DoorDash. DoorDash trades at a growth premium. This means that investors are paying up for long-term expansion. That's totally fine when growth and margins expand together. But because management is increasing investment spending, near-term margins are taking a hit. So the story currently is still growing, but heavier reinvestment in the business, which delays profitability leverage. That disconnect is what caused the stock to pull back. Not a business problem, but a timing problem. I did like how management laid out a pretty clear roadmap for why they're investing so heavily in the business. Their focus areas are non-restaurant categories, grocery and retail, have a much larger total addressable market, DashPass, increasing customer frequency and loyalty, international synergies, scaling markets faster with Deliveroo, and 4, long-term unit economics improvements, better batching, routing, and logistics efficiency. The company believes that these areas in the business are still in early adoption, and today's investments will translate into larger margin and cash flow down the road. So here's the bottom line for DoorDash. Bull case, they have a strong GOV and revenue growth currently, elite balance sheet and cash flow, expanding categories and global footprint, and a massive long-term total addressable market. But there's always a bear case for a stock. Dash is trading at a higher valuation, profitability timelines extended, international frequency softness. If you believe DoorDash can scale grocery, retail, and international markets efficiently, these dips can be a great opportunity. If you're more focused on the near-term margins, you may want to wait for clear signs of profitability. This is why investing is so great, because you can always make these decisions on your own. And if you believe these investments will translate into higher margins down the line, higher profits, this is your time. But yeah, hope you guys like my breakdown of DoorDash. I think this company is a very strong company. I am pretty bullish on this company. I'm not sure if I'm going to buy this company at this moment, but hey, if we get a little bit more of a drop, valuation looks a little more presentable to me, hey, I would think about buying this stock. This is not financial advice. Thanks for watching. Peace out.